Happy Thursday. Sorry for the delay. Just wrapped up a live class. Was doing a crash master class. We just went a little bit long. So this is the discussion for today. The 50 moving average has crossed the 200 moving average on the daily time frame. That is the dreaded death cross that never seems to do well for the markets unless we're going to see an immediate move to uncross this. So let's dive into the charts here in just a few minutes. Had a great class on the Crash Master class. We have a trade in for this week on futures. We mapped out our levels to see over the next maybe 3 to 6 months where to be watching for additional hedges. I've got good reward to risk setups and profiles on each one. I'm just trying to be patient. I'm not looking to time this market in any way, shape, or form. It's like if I'm hedging, I'm giving myself like a 6-month window, a 12-month window. I don't think that the next 6 to 12 months are going to be easy. I don't think that the lows are in. I think we have too many things that are swirling, and having a high of all-time highs and then having a recent low at 21 to 20% discounts. I think the market spends some time in limbo until more reality hits, and that might be the soft data becoming the hard data. I was expressing this earlier today. I think the reality is we have a lot of things coming as far as timing. So put this in perspective for a second, write this down, take some notes. Right now we have a 90-day tariff pause, right? The whole world is like waiting to see like how the US is going to negotiate. Does it get better or worse? Nobody knows. A lot of uncertainty. But we have 90 days, and that 90 days is going to expire in the early parts of July. It's going to be like July 4th to the 9th, something like that, somewhere in that window. I also don't know if this tariff conversation basically has no plan, and maybe this is going to feel like 2016, which is like Brexit. Brexit was summer 2016 that panicked the market in October 2016 that took 3 to 4 years to resolve. Like it was like an ongoing deal, and it was just delayed, more negotiate. Like maybe that's this. I don't know. So you have that window that maybe it's resolved by July, maybe it is, maybe it isn't. Maybe US and China come to some terms, maybe they do, maybe they don't. On top of that, you have the Fed that is likely going to be cutting rates in June. Pausing in May, likely cutting in June. I'm very curious to see how the bond market reacts. If the Fed starts cutting rates, does the market price it in? Does the market price in 3 or 4 cuts over the next 6 months? And do the bond markets go up as the yields go down, like it's done for 40, 50 years historically? Or is it going to be a repeat of 2024, which was the Fed starts cutting, and as that 100 basis points of rate cuts goes down, the 10-year, 20-year go up the opposite, and the yields go up. That's what September 2024 was. So that's another leg to this whole trade. Then you have earnings that are going on right now, and you can see how price sensitive things are. United Health Group was down 20% today on an average earning move that should have been around 7%. It was like a 3 times earnings move. So bad news is likely going to be very bad for stocks. And I do take earnings trades. I price them all out. And if we get some surprises, great. I'm not going to catch all of them, obviously. Like I would have never taken the trade on United Health Group based on the fundamentals that I would take in like the earnings on. Mathematically, the earnings trade made 0 sense to me. I wouldn't have taken the trade. But it was a surprise move that caught everyone's attention today. And maybe it's like, oh, what does this mean? The Dow is down a big portion today because United Health Group is down. So earnings is the reality of things right now. If earnings are not great and they're not showing growth, consensus-wise, we could see an earnings compression, which drives multiples lower. That also brings the potential market lower. Then you have September, October, November, December, which is when the employment situation becomes a reality. Federal workers that were laid off since February, March are going to have to go back into the private sector and start looking for jobs in September after their severances are done. If those severances are done and they have no money coming in and they apply for jobs and they don't get jobs, you're going to see unemployment rates go higher. And we're trading, we're seeing 4.1, 4.2% unemployment right now. Does it go up? Right? Do we see a 4.5 unemployment by the end of the year? Do we see a 4.6, 7, 8, 9, 5% unemployment by the end of the year? That is recession type domino effect. So now you have a death cross on top of that where it's like, okay, technically speaking, the bears are in full control of this market. So let's talk about it. Let's get to the technicals. Okay. Larry, I see your question there. What's a crash insurance service? So I run this thing called Crash Insurance Masterclass, and we meet every Thursday. And basically, I'm looking at how I'm strategically hedging my portfolio to, number one, look for some big reward to risk setups, protect my portfolio, manage my way through all this crazy stuff. I'm still profitable year to date, considering the market is down. I think from all-time highs, the market's down double digits. We're down 14% from all-time highs. And year to date, I think we're down close to 10%. If I go to the last 12 months, this year has started out on a rough note, obviously. So I'm not counting the wick high, but I'm just going to go from the year's open to current price. Right now, the year to date is down about 10.6%. And I am basically flat for the year. This was actually up about 10 grand earlier. I've got a lot of open positions. I've got a lot of fluctuating P&L, but I'm just battling this market. But I'm essentially flat for the year. And if we stabilize a little bit, then I'll have probably 6 figures of profits rolling in the next 30 to 60 days. But there's a couple things that need to happen first. So the service, if you're interested, let me see if I've got a link for it. prosperitypub.com/insurance. See if that still works. Yep. So there is a link for it. /insurance. So that's the link for the checkout page. Well, actually, it says you missed the offer. There's a call, so it's still available if you want to add into it. This is what the page will show. I didn't realize they took the offer down, but if you want to give us a call, you can give our team a call and we can get you signed up. So it is a live class, but I also issue alerts for it when I'm taking those trades. So I've already taken 3 trades in the service so far. We've gotten paid on 2 of them. We got another trade going until October. Another trade that I'm looking to get into by December. And possibly into March of 2026. Like I'm looking to hedge out through end of the year and hedge out through Q1 next year. But all the sessions are recorded. All the trades are posted. We can communicate to members instantly. So when I take the trade live in my account, you can have the alert. Okay. All right. What else? Let's talk technicals. So I think right now, given the seasonality of the year, I wouldn't be surprised. So let's zoom in at this little tiny death cross. Okay, let's zoom at this little tiny death cross. So the death cross is right here. Right there. That's the 50 period. 50 period value is down here. And then the red line is my 200. So if I zoom in, everybody see that? That crossover right there is the 50 period on the exponential moving average crossing the 200 period. Now, if you look back historically, this is what's kind of crazy about this death cross. When's the last time that it happened? The last time it happened would have been not even the correction in 2023. This was not a death cross. This was the 21 period, which is an aggressive EMA, and it went below the 200, then back above, but the 50 never crossed over. You'd have to go back to this would be like Q4 in the bottom of 2022 was the last time that we had prices. We were still in a sell zone here, okay, after we had that Q4 bottom of 2022. But the last time this was the first and fresh death cross would have been the bear market in 2022, which was here. This is your death cross. Isn't that crazy? This was May of 2022 was the last time the 50 period moving average crossed over the 200. That's insane to me. That it's essentially been 3 years since that's happened. Okay. And the scary part is like it's not flawless. I mean, just because it crosses over, I mean, we'd have plenty of close calls. And this market, dumped first and then came up and then dumped again, then came up, and it was all sorts of fake outs and bear market starts and then bull rallies, and it looks like, oh, it's going to go back up, and it didn't, and it crossed over, and then when it dumped, it was lower again, right? Because what happened after that death cross? This is what I want you to pay attention to. The death cross is right in here, okay? And we didn't get out of that until Q4 of 2022. It was way after that. So this death cross right here was not giving you the all coast is clear type situation until late 2022 into 2023. Larry, if you're a diamond member for me, you got to contact support. I know they dealt with that earlier, like all access members and diamond members. You should, I mean, I'm pretty sure they'll sign you up for it. You just have to get added into the classroom for that. Just contact support, prosperitypub.com. Give us a call. You probably know the number. If not, let me find it. I've got a 1 second here. Nope. This one. Let me find the number. Yep, so it's right here. If you want to give us a call, give the team a call. Give them hell, Larry. 904-706-3537. Give them a call. Okay. Do you give any weight to the fact that this was sort of a manufactured correction as much of it? No, I don't. Because look, there's such a thing as event driven, and then there's such a thing as structural. And I think this is a blend. I think this was very much an event driven, but the scary part is that this event driven all of a sudden makes everyone question what fundamentally we are doing. And that's what makes this a little bit scary, okay? Because this right here was a tactical correction. This was high concentration SPY. Mag 7 was 30+% of the gains. If you looked at the S&P performance with Mag 7, okay, with Mag 7 versus S&P performance without Mag 7, Mag 7 was responsible for pretty much most of the gains in 2024. That's what's crazy. So this correction was needed. This is more of a rotational play. This is event driven. But the problem with this event driven move is now it becomes a structural question. Because if we are changing the global economy as we know it, and this is forever different, this is way more than just a one-off event. This isn't a look. I do not give the Trump administration credit for manufacturing this correction and saying this was all part of our plan. I think this is being rolled out with really no plan. That's more than like we say stuff today, and if it doesn't go well, we'll backpedal. If it goes well, we'll take credit for it. And it's just like throw crap against the wall and see if it sticks. I don't think this is very well thought out. You know, when you roll out a global tariff plan that basically just covers entire trade deficits and doesn't actually, doesn't tariff items that we would be concerned with, it's not a tariff plan. And states in the U.S. right now are considering suing because we're using tariffs as a tax, which is against the law. You know, like that's an abuse of power. So there could be all sorts of weird things that happen. So I don't think this is event driven. I don't think this is rolled out with any type of real plan. I think this is, if it works, then we'll say that it was our plan. If it doesn't work, they're trying to step in line. They're trying to say that we got it under control. They're going to jawbone things to keep it, from falling apart. But I think structurally, there's a lot more fragility happening in the markets. And as I said, I'm very concerned moving forward with okay, if earnings aren't great this quarter, that's going to be a problem. If the Fed cuts rates and the bond yields go the opposite way like they did in September, that's a problem, right? If the tariff talk that is a 90-day delay, if that doesn't really have any resolution, that's a problem. If employment gets a lot worse through this year, that's a problem. And those are all things that need to be fixed for this market to probably go higher. And when I say higher, I mean to get back to all-time highs with some momentum. I think all these things need to be resolved. And if they're not resolved, I think that we are facing a lot of volatility ahead, more uncertainty, and possibly clawing at lower lows. Okay, and I just talked about this in that Crash Insurance Masterclass, but I just want to put a perspective on this bear market. So S&P, I think it's this one here. Yep. So here's some perspective. Okay, we see corrections a lot. This is since 1928. So we're going on nearly a century of the S&P, okay? We have seen every single year at least a 1% correction. Big deal. 95% of the time we've seen a 5% correction. Not a big deal. 64% of the time we've seen a 10% correction. Okay, well, 2024 we had 1, 2, 3 5% corrections. We had 1 10% correction. Now we have had a 15 and a 20% correction. And look at the timing. Happens every blank on average. When's the last time that we saw 25%? Well, 25% would have been 2022, and it would have been COVID. Before that, it would have been 20% would have been 2018. So 25% every 5 years. Well, it happened during COVID and it happened in 2022. Okay. We've actually, this is crazy. We've had, oh man, I hope I'm not getting this wrong, but I think we've had 7 technical bear markets in 8 years, or maybe in the last 10 years. Like the number is ridiculously high. And this is what I've said for anybody that's traded through 2018 to now, you have experienced nothing but booms and busts. But the problem is those booms and busts have only come to maybe a 20 to 30% correction, and then the market V bottoms and goes back up to all-time highs. This is where I'm getting more concerned moving forward. When's the last time we saw a 30% correction? 2022 and 2020. Legitimate bear markets, and what everyone thought the global economy was completely in shutdown. And then before that would have been 2008 and 2000. 40 to 50%, now we're talking some very low probabilities. Only 6% of the time, only 2% of the time, every 16 to 48 years. But if you go back and say, okay, 2008, okay, 2008 was the last bear market that we saw at a 40+% correction. How many years has it been, everybody? Well, this would make 17 years. So does it mean it's spot on where it's like every 16 years it has to? No, it doesn't. It can obviously go longer. We don't know. But it does mean to me that this could be much worse than just a little 20% correction that seemed to be manufactured, that seemed to be like, oh, it's a one and done event driven. I don't think it is. I think there potentially is a lot of structural underlines and a lot of systemic risk if this stuff doesn't get resolved. And the timing of it is like, if this doesn't get repaired in 90 days, look, it's going to take years to onshore U.S. manufacturing. It's going to take years for companies to figure out what to do strategically to get their companies in the profitability stance they want to be in the next couple of years. It's not going to be done in 30, 60, 90 days. There's no way logistically things can be done that fast. You can't ask, the entire world to shift their processes and shift their entire business model in 90 days. It's just not going to happen. So we're going into a 17-year window. I could see that we do have a potential, multi-year rough patch where it does ultimately carve out a 30, 40, 50% decline. So Pim's asking, what's worst case? And this is worst case, but I think that the S&P, and this is scary, but I think the SPX could go down between 4,000 and 3,000. And I know that's a big window, but that gets us into like the 35 to 50% correction zones. And that's going to suck. And I don't know if it happens in 2025, but I do think that it is very possible that if we have this type of reality in the next 1 or 2 years, like we're going to see some corrections that hit some levels like this. And it will be pretty gross. So it is all about survival, in my opinion. It's all about risk management in my position. And that is what I'm doing my best to take care of, is manage risk. That's the best thing I can do. The only way to survive is to manage risk. There will be so many opportunities to make money. But if you don't manage risk, you're not going to be around long enough to make that money. So that's my worst case scenario. It's kind of this window. And it's a lot. And I don't think we get there in a straight line. We went from 6,200 down to 5,500 up to 57, 58, like 5,900, and then flushed down to 4,800. We came back to 54, 55. We're hanging out at 52 and change. So, what's next? Well, we could have a bit of a play back up here, and then the market finds resistance, and then we go right back down to the lows. We could hang around those lows for a while. We could have a range year where the market doesn't really do anything good or bad. It just kind of establishes the high and the low, and then we just figure out how to trade it between those. But if it gets worse, technically, I think we claw at the lows and we come back and we have a lower high, lower high. Let me just clean this up. So if we go from this look so far for the year, okay, this is what 2025 looks like. If we go back down to the lows, okay, and we make a lower high, I think this market just does that, and it just stays in a bear trend. So until we're at 30, until we're at 40, until we're at 50, I'm not getting super brave on calling the bottom. Okay, so if it's always going to happen, how can you blame the current leadership? I mean, that's how it always is. You're always going to Trump's going to blame the previous administration. Trump's going to blame that the U.S. has put itself in this situation they had no choice but to do this, right? All these things are being described as this is what we have to do. We don't. We don't have to turn the global economy upside down, but we are, you know? And in 2 years when we have midterms, if this is bad enough, guess what's going to happen to midterms? Everyone's going to vote the other way. Republicans going to lose the Senate and the House, and we're going to have a lame duck presidency for the next 2 years. And to finish out his term, like nothing's going to happen. It's like that's what's stupid about our political system is everyone can blame what was done before and say that we all got here because we're fixing the wrongs of every other administration, and it's what it's been. It's always been the blame game. So look, Ray Dalio even has it on a YouTube video. He's like, I think I don't know what he said. I have a he did an interview. He's obviously doing a book tour right now. He's selling a book in September. He's got the Changing World Order. He's been blasting this stuff for years now. But it's something effective like, I see the need for this. Like I see the action, but I don't like the solution. Right? Like so I understand like there's a reason that this has to happen. But how we're getting there and how we're trying to get resolution is not playing out very well. So, and like I said, I think that this becomes what is and probably was meant to be an event-driven correction could also have like larger structural systemic consequences for the bigger economy. Could be global, could be just US, but I'm assuming it's going to be both. Yep. And look, I get it. I mean, Trump is a president that has diehard loyalists, and you can support him all you want. This isn't a political game for me. I'm trading to make money. I'm trading to provide a living for myself. And the reality is, I'm doing whatever I can to survive. It's easy when the market goes up, but if traders are down in this environment, you can understand why it's not easy. So, whatever's happening, I think there's commentary, there's jawboning, there's all sorts of ways to manipulate. There's lots of, I mean, look, you want to talk manipulation? Look at Wednesday, April 9th. If that's not a complete manipulation of the market, I don't know what is. Our president literally tweets, "It's a great time to buy." And a couple hours later, the market had one of the most historic rallies it's ever had in its entire existence. So is now everybody thinking like, well, I'll just follow Trump's tweets. It's like, are you serious that that's what's going to happen? That the market's going to go on every word of our president? Like that's freaking insane. So it's not going to be easy to navigate this because if you don't say the right things, the market dumps. If you say the right things, maybe it goes up. And all of a sudden, this stops making sense. And good news is bad news, and bad news is good news. It's like, it's not going to be that. You can't trade the markets fundamentally. You can't just trade the markets technically. I'm telling you, look, the only thing that's going to work is survival. Risk management and survival. That's how you make money in these markets. It's easy when it goes one direction. That's fine. But it's not easy when nobody knows what is happening. This is probably the most uncertain that I've ever been in 25 years of trading. And that's saying a lot. When I've traded through, I didn't know anything when I started trading in 2000. I just traded, passive investing, dollar cost averaging every month, survived, 2008, same thing. Started trade FOREX in 2007. Got my butt kicked, figure a couple things out, scalp, day trade, not have overnight exposure, survived, did fine, swing trade, just evolve, just keep trading. But I mean, I'm a pretty seasoned trader. And this is the most perplexing situation environment that I've ever dealt with. But, it's still just one trade after another. And I'll take thousands of trades and I'll figure it out and I'll be fine. It's just not fun. It's not fun. So, anyway, point is, there's nothing we can do to control it, right? Like all this crap that we're talking about, you can sit here and be upset and be frustrated. Like that doesn't help. All you can do is make sure don't do anything stupid with your trading accounts. Don't over leverage, manage your risk. Opportunities will be there. I mean, look, this has been in my services these last couple of weeks. I mean, as the market's been just absolutely chaotic, we have 71 out of 76 trades winning, 63 out of 69 trades winning. Actually, now it's 65 for 71 trades winning. Like we are doing fine. We're making money. We're income trading this market, and this is nuts, but we're doing fine. You know, so there's ways to trade. There's ways to survive. I just think the crazy part is, if you're overall exposed, how much does that hurt if the market goes down versus how much does it help when the market goes up? I just don't want to rely on the market like having to make all-time highs for me to make money. I want to rely on, can I trade my way through this? And, even though the market is down from the all-time highs, can I still make money here? And, what was about $195,000 was down here at 205. I mean, if we get a little bit of a rally into these next 30 to 60 days, I'm hoping that I'm back up to like 200 to 250K in profit because I took a ton of trades in this environment right here. And I took losses. I took some chunks, but I've also sold enough premium and took enough trades that I stayed with it, and hopefully it all washes away and I'm still sitting at like good chunks of profit, and I'll just keep battling and keep fighting. So anyway, that's it. So technicals, I mean, look at the charts. I know there's a lot of crap on my screen here, but just bear with me. So I mean, right now we're kind of in no man's land. We have this high and we have this low. I think the bears are just waiting and salivating up here to maybe flush the market lower, but the market may be able to go swing from Wednesday, pull back, and have some chop here the last week. It's literally been a week since last Wednesday, right? So the market goes indecisive here, and then maybe through the seasonality can drift a little bit higher through April and May. And if that's the case, cool. Then maybe June, July starts to stall, and then maybe roll over, and then we start working our way back down. I could see that. We don't make new highs. We come back and we claw back at the lows. Maybe it's not enough to do, crazy damage to the lows, but it's enough to get us tested again. It's enough to get us nervous again. It's enough for the VIX to maybe have two spikes into 60s. Like who knows? But I just think it'd be crazy if the market if you're not prepared for some ugliness to the downside, then you're not paying attention. And I don't know where everyone's at. Like maybe some of you are so passive it doesn't even matter. You go out 10 years, who cares? You buy the dip and don't look at it, and you just keep buying a dollar cost average. That's fine. But you're just going to spend years in a drawdown, and then eventually you're fine. But yeah, if some people are not with that time horizon, if some people are, in bonds and stocks and they're trying to go passive, they're trying to, de-risk, it's like, no, this is not a fun environment to be de-risking. It's crazy. Okay. Sam, I would say daily profit play. So I'll type this in, daily profit play, waterfall income, newsbreakers. Those are probably top three that I'm most active in. Double up has been really challenging because I'm looking for high reward to risk, and it's just been really tough. I'm getting a lot of false signals day to day with the volatility we've seen. I'm getting a lot of false signals, so I've had to be really patient on double up. We've had a couple. I've taken some butterflies that have closed out for 60, 80% gains. I had a couple that had I held it longer for the day, there was like a 500% gain. But I'm picking my battles really carefully. And then the crash insurance course has gone well. That's just more big picture, and we're meeting every week. But that's just like, that's a long-term thing. Like I hedge every quarter, I hedge every 6 months, I hedge every 12 months. I have to, when I manage money, I've got to protect the portfolio. Otherwise I'm doing, clients a disservice. That's way too much risk to have. So I would rather have, my risk adjusted returns would be keep the drawdowns less than 10%, make as much money as I can on the upside. And the way it works out is I average right around, 20% a year, and I do okay. And I also, haven't had a losing year. Here is I think I've got a PDF right here. Let's see, maybe I got rid of it. Well, it doesn't matter. If anybody asks me for, money management stuff, I have a summary sheet, and from 2014 to now, I haven't had a losing year. Even through Brexit, I still had net gains, and I carried on to new highs in Q1 2017. So it's been like a pretty good chunk. And even this year, it's not easy, but I think I'll figure it out to still be positive on the year. Okay. Lee says, you think the S&P will head to all-time highs later this year as a typically bullish? I don't know, man. I think if we're lucky, and this market finds a way to go to all-time highs, I'm still not really believing the reality. I'm sorry to say it, but this to me, it rhymes too much with 2008. And 2007 did this. 2007, we had a dump and a rally back to the highs, and then when we dumped the next time, it was way worse. And you talk about like the ultimate fake out, that would be the perfect fake out. Everyone gets so excited. Everyone that's been scared is getting back in the market at the highs. And what happens? You freaking trash them for another 30, 40, 50% to the downside. That would be 2008 all over again. So I mean, I I am so skeptical of this market that I'm just going to protect. So look, I'd love it. I'd love it if it gets back to all-time highs, because if we get there, portfolio is easy money. But on the protection side, hedging is monster profits. You know, I could hedge for like 30 to 1, 40 to 1, 50 to 1 profits. I could protect my entire portfolio if it gets back down to that level, you know? So there could be lots of good potential there, but still not going to be easy. William, I'm going to let that expire on the 24th. Copper is still looking really good. So we're trading at 4.7. Copper's actually green on the day by 0.31. This is trading for like a 3 delta, and I don't think we're going to squash this down by Thursday next week. So I'm just going to let this one expire. If somehow it comes back down, there could be a bonus profit there, but I think it's good for just the full 160 a contract. Okay, Quang, you can send me a Discord message if you want. Agree until stability happens. Reset the world war. Yeah, I know it's going to be ugly, man. Like none of this is easy. There's a lot of structural and systemic risks right now, and liquidity is not the same. Like the Fed is not really providing the backstop until their money supply gets thrown in. They're not backstopping until we have the last time the Fed backstopped was the 2023 regional bank crisis. If you look at the ticker KRE for regional banks, the last time the Fed stepped in would have been back here, February, March 2023, when we had Silicon Valley, First Republic, there was like 3 banks that were just like major headlines, insolvency, because they were forced to have bonds in their portfolio and forced to have duration, and the yields have rallied, 500 basis points. They were basically getting their bonds at like 70 cents on the dollar, and they were getting, deposit requests, and they needed liquidity and solvency. And so what happened? Well, in order to make good on those requests, they had to dump losing positions, and they did so to the tune of billions of dollars, and they didn't have any money. So it was a solvency issue, and they were declared basically insolvent. The Fed had to come in and backstop that. Now, that was a good opportunity in the near term. I actually bought KRE around like $40, but that was more of like an event-driven move. But this could also like get worse, you know? Discord, yep, I'll send it. So Discord, I'm going to send a 30-minute invite. I don't like that to sit out there and sit on YouTube for reasons that everyone like. I don't want to deal with like spammers and crap like that. So 30-minute expiration on this. New link. Okay, so this is Chris Pulver Trading Discord. There you go. And then my Telegram channel. It's free for everybody if you want to take a look at my Telegram. I do post, live session links. I post, check your member portal. There's a trade alert. There's a classroom. Blah blah blah. So it's it's kind of all my services in one Telegram. But you can check that out if you want, if you haven't subscribed to it. So it's right here. There you go. Telegram's there and Discord up above. If we faked bears to a new low only to drive all the way back up, I totally get it, and I'm prepared for that too. I've talked about that many times this year, and here's why I talked about that bear trap, because I said this multiple times last week. I did a TradingView video. If anybody has TradingView accounts, I would love for you to go to, if you can look me up. Let me see if I can go to my profile here. Hang on a second. Let me go into this account. Maybe it's in here. I got a lot of comments there. That's fine. TradingView. Let me just find it here. Profile. Here it is. Okay. So I'm going to share this link with you. This is a video update. It's like 12 minutes and 34 seconds. I'm getting a lot of supports on TradingView. I was picked as like TradingView's like editor picks. So I mean, I've been very fortunate the last few years. I've been at TradingView for a long time, and I post some good content. I've been doing this for a while. But anyway, if you want to check out the video, I posted on YouTube. It's in TradingView, but it does help if you click on this little rocket and boost it. If you want to leave a comment, like all this is good stuff. So if you want to check this out, here is a video. I'll share this in the chat. So this is a S&P 500 key levels. There's a link for it. And you can have the chart, you can play the chart, you can watch the video, you can boost the idea, support the idea, and nice. We got about 1,600 views on that, so that's pretty sweet. And I do this usually every couple of weeks, but I mean we're talking big stuff here, and I'm trying to do my best to say, look, this market's not easy. If I'm sitting here racking my brain to figure out ways to generate income, and it's really like it's doable. I mean, focusing on a couple of my specific trading strategies and my services, like we're just grinding every day and every week to grab these little income wins, and it's fine. It gets us out of the crazy exposure. It gets us in and out of the market, and we can just trade to win and not have to sweat like the big stuff. It's all defined risk. So anyway, check it out if you want. We've got some earnings. So this week we have Netflix after the hours. I've got a webinar in the next 10 minutes. I got to jump here in just a few minutes. I got a webinar that is actually in a position pending Netflix right now. And we had a position that was a winner today on DHI, which should be, this is probably trading for like only a couple of dollars now. I took the trade out for like a 48% win, but I'm curious what it's showing right now. Right now that trade is down to 275. This trade is up over 100%. So not bad. I didn't wait that long. I literally took the profit early this morning. $6 credit, took it out for 450 debit, made about 48%. Did that in the first 2 minutes of the day, and that was pretty easy. Now it's down to about 275, and honestly looking pretty good for like full profit. So, but I didn't hold that long because I knew I'd have to do this. I'd have to wait all the way to like closing bell, and had I done that, sure, I'd make some money, but I didn't want to. I took the profit, moved on. So that was a nice little trade. I've got another one running on Netflix that is going out for the next couple of weeks. Netflix has earnings today after market. So if it is above 1047 or it's below 918, I'm going to make some nice profit on Netflix. So we'll see. All right. I'm also looking to take, I'm going to take an assignment on Tesla this weekend. I'm going to get assigned at 255. My break even is going to be 247. And I'm going to protect myself because next week there is an earnings announcement on Tuesday, the 22nd after market. So Monday, the 21st, I will have to make a decision on how I want to position for the risk. If it goes to the downside, I want to make sure that I can protect myself down to like, maybe 180, 170. And I think there's going to be a gap fill there. But if it goes to the upside, I want to have basically an uncapped position. So a couple ways I can do it is I can just do a put and have it be short term. Or I can do a collar, which means I can sell a call and buy a put. And if price goes down, I protect my put side. If price goes up, I get it called away. It's a repair. I'll just do the numbers. I mean, if I own it at 247 and all in all, I can repair this thing for, let's say, $1,000. I mean, that's okay. If I could lower my cost basis by another $10, $15, $20, that's okay. So, but I'll have to do that on Monday. So we'll see what that looks like for next week. I also have to add another covered call to silver. I have to add another collar trade to URA, which is uranium. I have to also add some more covered calls to IWM for my small cap exposure with the Russell. And all that's good. So. Okay. New comment from Basic Trading TV. What's this say? A trader that's trying to be bullish. With certain stocks like Micron creating bottoms, SPX did it. Really? So Micron determines that the S&P goes higher? I don't know about that. Battle Royale. I noticed you took a shot after all long copper. Yeah, I was long copper through all this crap. I was long copper when this thing was up here. I took the position with a 1-1-1 trade, and even through that, nasty move, this trade was up almost 95% of the profit until we had that fateful crash on this. What is that? The fourth, the third, fourth, and seventh. That Thursday, Friday, Monday. That combination, I went from 95% profit down to risking in the trade because we came all the way down to lows of 4.03. And I was actually at a loss here of about $1,000 an account. So I was down about 13 grand, and now I'm back up to like 1,000 whatever, $3,000 profit. So what a wild ride on a lot of this stuff. I'm still hedged Japanese yen. I talked about this all this morning. Mags is still just not showing recovery yet. This could be another opportunity to maybe get long mags if we come back down to lows. I'd like to see some divergence on mags and maybe get long. I think this is another one it's possibly given that death cross. So the death cross right here, the 50 and the 200, it's death cross on mags. If we go down to the lows and we have a poke of those lows, we might bounce. And on top of that, before we go, the AAII sentiment survey has printed bearish over 50% for 8 straight weeks, which I believe is the worst ever. 8 straight weeks over 50% bearish. So, usually that's a contrarian indicator to say, look, everybody's bearish, and so therefore the market doesn't want to go down. But I don't know. Obviously the market's gone down and this has been bearish. So I think the scary part is, eventually it's like, what gets this sentiment to switch? Honestly, I feel like the sentiment switches if Mags finds a way to go back up to the 200 moving average. If the SPY finds a way to go back to the 200 moving average, this is probably what gets people off of their bearish case. And then everyone starts to get a little bit more relief. And then we'll see if the market is going to dump it again, or the market maybe gets back to highs and then dumps it again. But I think right now, and I put this in my thumbnail yesterday, it was a 13.5% range. It's basically this high and this low. So don't be surprised if this market for the next couple of weeks just spends time doing this, right? Maybe it goes down to retest the lows. Maybe it comes back to the highs, but it doesn't really give us any clear direction. Because all we're doing right now is we have some earnings that are getting sprinkled in, and we got a 90-day pause in tariffs, and the market doesn't know what to do. So lots of chop, right? All right. So, okay, I'm going to let you go. I got to jump into a webinar here in 1 minute. You're all welcome to join me if you're in my Telegram channel. It's right there. So you can click to tune in. I'll be jumping in live at 4 p.m. Jeffrey and I will be discussing Netflix as well if we can see the immediate print. I'm curious what the earnings per share and revenue shows for Netflix and if there's any post-market movement. Nothing to trade on Netflix. I do have the trade already in. But if we open up on Monday and Netflix is above my level that I need or below my level I need, I'll make some money there. That's cool. But hopefully I'm getting a big maybe a surprise move on Netflix. So maybe good news is good news. Maybe bad news is bad news. Maybe it doesn't really matter. But I took a chance at it. So try to do something relatively cheap. Okay. Thanks, everybody. Have a great rest of your day. No trading tomorrow. The market is closed for Good Friday. Bank holiday. Stock market's closed. And I think you all deserve a day off. So enjoy the Friday. Enjoy the long weekend. And I'll see you soon. All right. Thanks. And if you're not a subscriber to the channel, kindly subscribe, youtube.com/Chris Pulver. Click the thumbs up button. That helps for everyone watching live. I usually have 150, 200 people watching live, 300, 400, 500 people watching after the fact. Just that little click of the thumbs up button goes a long way to help and support the channel. And it's so simple. A caveman can do it, as they say. All right. Thanks, everybody. Have a good day. Bye.